Good morning, everyone. Welcome to Diamond's Edge Live. We have a new time on the show to hopefully give you a little bit of pre-market action before the market opens. Not a whole lot happening today or this week. I think the market is looking towards the jobs number on Friday, and as we discussed last week, as I've been telling 10 Stock Trader subscribers recently, heading into next week and then the last week in June is what I'm looking for in terms of next important inflection points. I'll get into some of those as well. And this week, what I want to cover is gold. Okay, we're going to look at the price of gold itself. We're going to look at some conservative along with some aggressive targets. Okay, we'll look at some support levels that need to hold for that to happen. We'll also look at silver and how that's been trading and finally catching up with gold. And then we'll take a look at the mining stocks, GDX, for example, and whether or not that can actually make new all-time highs, catching up with gold into that 2011 top. So we'll get into all of that. But first, before I get into it, a lot of some fundamental analysis or reasoning behind why gold does what it does. A lot of people say it likes to track inflation. Partially true, okay, but you can look at what's happened over the last 2 years, almost 3 years, okay. The high in 2021 in stocks, we saw inflation go rampant. We saw interest rates spike, okay, and then really from 2023 all the way now down into here to 2025. What has inflation done? CPI, PPI have been trading lower. Gold has been trading higher. So it's not all necessarily just inflation. A big part of it is government spending, okay? And another big part of it is geopolitical risk, in particular war. We saw what happened with Ukraine and Russia over the weekend, and gold spiked up. So, is it a combination of all those different things? Spending, inflation, geopolitical risk, and war? Absolutely, okay? But as I like to say, it's fine to look at the why a market is moving, but for me, what's most important is the price action, okay? All right. So let me share my screen here and we'll get into some of the price targets I have for gold. And what I want to focus on here is conservative and aggressive targets, all right? And what I mean by that is I like to be pleasantly surprised if there is an aggressive move that happens, but I like to outline the scenarios in which that could take place, okay? So this is the price of gold, and you can already see I've pre-labeled some of this stuff just to make it a little bit easier, okay? And I'm just going, now you can see how gold has been trading higher, okay? It's been in this nice trend, and we broke above this channel, okay? So this to me is very important. We came back, we retested it here in mid-May, all right? And now we're here rallying again. So this is, I talk about the support levels that need to hold. This is something that to me needs to hold, okay? And this is where moves can accelerate. Some people might think, well, hey, gold's already had this huge run. Doesn't mean it can't go higher. In fact, it could go a lot higher, and I'll get into that in a second, all right? But from this breakout above this channel, okay, you can see here, I have labeled 1, 2, 3, 4. This is a conservative target, okay? This is this wave 5, and you'll notice that I have this in between the next time factors that I just outlined, okay? That comes into play Monday, Tuesday, next week, and then later in June, okay? Also note, I've marked this wave 1 up as 335 points or $335, okay? And then I added that to around the low of wave 4. What's interesting about this is what you'll see in Elliott Wave, and again, for those who haven't read the Elliott Wave Principle by Robert Precher, I highly recommend it because it gives you some of these targets and what to look for. Now, oftentimes we'll see the wave 1 equal or be around equal the length of wave 5. I'm not trying to say that it's going to be exactly the same. It's around it, okay? So you can see here, as I labeled this wave 1 as $335, add it to the wave 4 low, and then that comes in right around this high, this spike high around April 22nd, right around 3,500. Could it bounce up and then drop a little bit? Yeah, again, this is the conservative target, all right? Now let's get a little bit more aggressive, all right? And that would mean a high around 3,700. Well, and that's 542. Where did I get that from? We see a Fibonacci relationship between the waves. So sometimes, especially in commodities and gold specifically, we'll see the wave 5 actually be 1.618 or 1.382. Again, a Fibonacci um, correlation between the first wave. So I just took $335 times 1.618. That got me to 542-ish. Again, that gets you up to the 3,700 level. So you can see, all right, these are just conservative targets, one a little bit more aggressive, all right? And that would make sense to me if we saw a high in gold around, again, let's call it into late June, a low in stocks, if that correlation takes place. All right. Now, we could be in a situation where stocks and gold rally together. We've seen that. All right. But I'm just looking at this as a conservative price target for gold. Now let's get to the aggressive one. And this is where things really get interesting. All right. So same label, 1, 2, except now look at here. And I pre-labeled this just to make it a little bit easier to see. I measured the low in February of 2025 up to this wave 1. No different from what I just outlined, okay? And then I took this, I wanted to see where the support held. And it's held right at the 61.8% Fibonacci retracement level around 2960. So the difference here is that you can see I've labeled this as a wave 2, all right? Then we had another rally, all right, up into April. I did the same thing. I wanted to measure the Fibonacci retracement level from this high and this low, and that stopped right around this low around mid-May. Now, 10 Stock Trader subscribers, and I mentioned it, last month in terms of, this time cycle in mid-May that turned out to be the low in gold, okay? So, but what's interesting to me about this is this also, for the most part, found support near the 61.8% Fibonacci retracement level. All right, so what does that mean? It means what we could be looking at, and I've labeled it up here, is a wave 3 of 3. These are about as powerful as it gets. It's not about, it is as powerful as it gets, okay? So if that is the case, you could be looking at a move in gold north of 6,000. I know that sounds crazy. I know that sounds a little bit, out of bounds, but based on this wave 3 of 3 move, that's what you could get. Now, that move could take a long time, 6 months, 12 months, whatever it might be, but the possibility is there. So is this something that I'm going to, hey, we're going to go to 6,000, let's buy some call options there? No, not necessarily. Again, it can take a long time. Okay, but what I want to see first is how this shakes out, okay, heading into early next week and then late June. I want to see this correlation with stocks and how gold reacts to that, okay? But then we can think about the why. We can think about if war with Ukraine and Russia heats up. God forbid there's some, nuclear, nobody wants to think about that, but what would make that happen? Probably something like that, something very, very drastic in war that would push gold. Also the combination of, spending, okay? Government spending is completely out of control. Is that can continue? It looks like it. Those are two catalysts, fundamental catalysts to drive gold higher, okay? But again, if you just take out that noise and look at the price action of it, as long as this support holds, and if we push through late June, that 6,000 level, maybe let's call it 5,500 just to be on the safer side, whatever, you're talking about a huge move in gold that could absolutely happen. All right, so that's gold. Let's take a look at excuse me. Let's take a look at silver. Now, silver hasn't been keeping pace with gold in terms of gold's making new all-time highs and silver hasn't. Okay. And you can see here, going back to this 2011 top, now it's finally starting to keep pace. Okay, it's finally starting to, you have these big drops, but then it comes right back. Okay, so is silver something that's going to be, on the move with gold? It absolutely could be. Okay, so this is something that I'm watching as well, and as you can see, we rallied into this new high. Now, what I'm going to be watching, again, can silver, like gold, get through these June time factors and then take off? If we see a top here in silver, okay, and I start to see that before gold happens, and then, again, let's say we have a smaller correction in stocks make a low, gold and silver make a high, okay, that's where the conservative target kind of comes in. So this is going to be important to watch this relationship between silver and gold, but also how precious metals and stocks correlate into the end of June. All right. Now let's look at the gold mining stocks. And similar to silver, GDX, you can see this is a weekly chart going back to 2011, the top. And, it hasn't caught track or kept pace with the actual price of gold. And that's been somewhat frustrating, especially for someone who likes to see, prices, correlate with one another because, back in 2011, gold and, and GDX moved very closely with one another. Okay. Now you can see here that we've broken out to new highs. So it's okay. Is this something now where we have the setup technically to explode higher? All right. So let's do the same thing that we did with gold. Let's just do it with GDX. Okay. And you can see here, this is just about as perfect as it gets. All right. So to me, this looks like a wave one, a wave two that again held this 61.8 Fibonacci retracement level. We broke out. To me, this is a wave three. And we bought a double ETF leverage play on this, okay, to take advantage of this setup. So once again, as long as this low holds, and this is the mid-May low, and GDX, the low was, what was it, 45.10. Okay, now we could, let's say we get a little bit of a pullback, okay, but we hold support. Again, this is going to be very, very important. But let's say we pull back, we hold support. What would that look like? Interesting, okay, because now we can look at this as a wave one, and this is a wave two, and then we get this wave three. So essentially what that would be is a wave three of three in GDX, which matches up with wave three of three in gold. I know some of this might be confusing. I know some of it might be moving a little bit fast. If you don't understand Elliott wave, it's okay. I'm just giving you the rules of what Elliott wave tells us, okay, and applying it to the markets right now and saying, hey, this is why I wanted to talk about gold, because it's not often you get these type of setups. And you have the fundamental catalyst as a backdrop to make that happen, potentially, okay? So as long as support holds, as long as, and if you get through these, June time factors, I want to see how that correlation plays out. This is something that could really be a spectacular trade, a spectacular move between gold, silver, and GDX, okay? So again, not much happening with the stock market. I think we're going to be waiting for the jobs number on Friday, but an important move. That's what's happening in precious metals. I wanted to highlight that this week, and we'll continue to track it. But I'm happy to take any questions. Thoughts on Dollar General, DG? Sure, let's take a look. Pull this up. I've seen a lot of these charts that you guys have had questions about, and again, I'm happy to answer them. That's part of the show. But you can kind of see some of these big stocks that have just not kept up, or not big, but any stock that has not kept up with the overall market, and this is certainly one of them. And you can see how we've had it is trading above its 200-day moving average, so it did bottom, okay, with some stocks, which is good. It looks like maybe it had, I don't trade Dollar General, but it looks like it had a gap up here, maybe nice earnings report. So, if we're just looking at this now, this could be a situation where you get a 5-wave move down. So, this could be a potential situation here where you get a wave 5. The other scenario would be is that it's still in a downtrend. So and this is, does it fill the gap? It's close to filling this gap. Actually, the gap's up here. So if you can fill this gap, correct a little bit, you can see it's a little bit oversold or overbought. Maybe we get a correction and then it can rally up. But I personally would want to see this start to make higher highs. Simply because it hasn't kept pace with the market. But that could change with this move that we've already seen. How does looking at these lines represent anything when money is fiat? Well, this is where again, whether money is fiat or you like to have gold or Bitcoin or whatever it might be, it's what the markets do. It's whatever markets you're doing it. It has nothing to do with fiat. It has what it tells me not exactly, but it gives me a roadmap. Okay, it gives me the probabilities of what could happen, what is likely to happen. You have to manage your risk of what is likely to happen based on history, based on patterns, based on human emotion, greed, and fear, which is basically the overall expression of Elliott wave. Your prices on a chart. What has that behavior taught us in the past? Okay, so I like to say, opinions are like rear ends. Everyone has one, and they tend to stink. What I care about isn't what people's opinions are about fiat or not fiat or gold or any market, any stock, whatever it might be. What I care about is statistical analysis, the probabilities of what that statistical analysis is going to tell me based on the past, okay? And then managing, and then taking action, and then managing that risk. That's what the lines tell me. Again, based on history, based on repetitive price action, and based on time cycles. TSM, Taiwan Semiconductor, has been a leader, okay? And basically what we're looking at here, you can see I've labeled this, and what we could see here, we've looked at this in the past, and so let's move this to, let's move these time factors here, and I think this is important. I'm glad somebody brought this up. So you can see here I have this wave 1, 2, 3. Okay, let's say we get a high into early next week. Again, I think that's going to be the next time factor. Again, it could just be very, very short term, similar to what we saw in mid-May. What this would tell me is that we get a low, okay, into the end of June. This would create this blue wave 4, all right, and then we get a rally into end of summer, middle of summer, whatever it might be, September, okay, and then we get a much larger correction. But this is the most likely scenario that I have right now, looking at TSM, but also looking at the general stock market. Can you look at snow? Sure. So this is this is actually, it made a new high. Okay, it's not keeping it hasn't made a new all-time high. You can see here going all the way back. This is kind of similar to once again some of the stocks that we've looked at. Okay, so a little bit overbought here. So if this is going to start keeping pace with the overall market, and we do get a correction, this is something you can kind of see here. Just really quickly, just looking at this, just with first glance, maybe a 1, 2, 3. Again, similar to what we just outlined in TSM. We get a 4 into end of June, maybe July, and then we get another rally. That would at least be the short-term outlook for this stock. What do you think about rare earth stocks right now, like MP? I'll be honest, I haven't looked at it, but let's take a look now. So, obviously, the rare earths are important in terms of electric power, batteries, stuff like that. But you can see here, there's been this particular stock has been in a downtrend since the top in 2022. It can't keep pace with the market. To me, this has a corrective feel to it. So this looks like an ABC. Let's just take a quick glance at maybe some support or resistance rather from this high. There we go. So you can see this is very interesting to me. You can see here I measured from the top to the bottom, and then the stock couldn't break above this 58 or 38.2% Fibonacci retracement level. So this tells me that there could be a little bit more downside before you get a bottom. I'm actually going to start keeping track of this now. Thanks for bringing it to my attention, because this could be, maybe it'll take some time with 2026. There's a big fight going on with rare earth metals. So this could be a trade, in the future, one that we could look at. But right now, this has to look to me that we could see a new low. How sensitive are your gold targets to a sudden spike in the US dollar? That's a great question. So when we look at gold, all right, and this was what was very confusing to me, at least again from a correlation perspective, when we go back, to 2023, all right, and it just kept rallying. And I was also looking at the dollar back, over the last couple of years, and you can see we had this huge move in the dollar, but gold just took it in stride. So this is where it's not necessarily just a trade based upon inflation. There's something else going on. Again, geopolitical risk, war, So that to me is something that I said, okay, if gold can get through that type of move in the dollar, we're looking at something else here. And that's when I just tend now to tune out the noise and look at these important setups. What are your gold and silver stock plays? I am new on here, first timer, thanks. Well, welcome, Pam. So, I can't go into what we've traded for 10 stock traders, but, we look at GDX, we look at GLD, okay, it was just an ETF that tracks gold. We look at NUGT, which is a levered play on GDX. You can look at SILG or J, excuse me, which are silver mining stocks. You can also look at SLV, which is the ETF of silver that tracks silver, the price of silver very well. So if you're new here, again, welcome. I'm going to be talking about these a lot. And I'm going to be talking about this on 10 Stock Trader app and website through Stansberry Research as well. What do you think of TEM? Let's take a look. This is very volatile, but there's no real trend here. So I would have a problem. Again, I always like to say, look, I'm not telling you what stocks you can and can't, or what markets you can or can't make money in. But to me, this is something that I would stay away from simply because, number one, there's not enough price history, and number two, it's not trending in any direction. Obviously, if you wanted to get very risky, you could trade some options when we see these big spike downs and big spike ups. Looks like a pretty good indicator of volatility for just, again, limited price action. But, as far as me personally, this isn't something that I would look to trade. Okay, that's it for this week. Again, next week might be a little bit more volatile. We'll see how the jobs market shakes out, and then we're going to keep track on gold, silver, and on these mining stocks because the setups there have the probability of making some pretty big moves. Thank you very much, and I will see you next week.